Hey traders, welcome back to another Weekend Trading Edge video. My name is Akil Stokes. I'm a forex trader, also a trading coach at tier1trading.com. And this is a video I do each and every weekend, giving you an outlook of some of the best trading opportunities that are on my radar for the week to come. By the way, if you're new to the channel, make sure you subscribe. I upload basically every day in many different formats: podcasts, live streams, short videos giving trading tips. If you are subscribed, do me a favor, hit that like button right now before you forget. Now, let's hop into the video. We're going to have a very interesting week in the market because we're coming towards the end of the year and we're really approaching the time where we have a lot of kind of last-ditch numbers coming out for the year and a lot of last-ditch decisions, right? For example, we have a few interest rate decisions coming out. We have Australia, we have Canada this week, and then we have the US, we have the ECB, and I think one more next week as well. And this is going to be really the final fundamental announcement before the year's end. Now, what's interesting, and let's kind of focus on the ones that are happening this week with Australia and Canada, is that, well, if you're new, markets don't necessarily go crazy every time a news event goes off, right? The market typically interprets and kind of prices in news events well before it happens. Where you see the big, massive moves based off news events is when there's a deviation from the expectation. So meaning that something comes out that is different than what people expected. For example, for non-farms payroll this past week on for the dollar, right? Our Fed Chair Powell came out the day before, I believe, and said one thing, and then the numbers came out and basically contradicted it. And that's why we saw such a kind of a weird movement over the last few days. Well, we have the same thing happening with Bank of Canada and with Australia as well, where there was a consensus that there was going to be a rate hike. But now the markets are thinking that, well, maybe they'll just keep things steady. So you have different parties thinking different things. I would expect massive movements for both of those news events when they come out because one party is going to be wrong. Now, let's start here on the euro dollar. And again, you can see kind of the aftermath. Let me get rid of this VS1 level here. You can see some of the aftermath of last week's end, right? We kind of rallied up and then we rallied back down and then we rallied back up to end the week. Well, what we have here in the daily is a very positive candle. Not only do we have a break and close above a previous level of structure the day before, but we have a very nice bullish rejection candle. Again, if you look at the wick of this last day, this final day, we can see that price action started with the non-farms, again, pushing all the way down, looking like we may engulf the previous day's range, only to retrace and finish complete at the very top of the range. And this screams potential breakout all over it. And if we go down to a lower time frame, you'll see kind of a clearer picture of this. Let's go down to, this is a 4 hour. Let's go one more down to an hourly, kind of get a real look at it. Again, you can see price action was consolidating at the top part of this range before news came out. And then we spiked all the way down, massive event, found some buying pressure down here and came all the way back up, basically right to where we started. When I see this, this shows me that the sellers tried to push down. They were rejected. Buying pressure should be in control. And what we would be looking for here is a break of this level. And if we can break this level, there's a good chance we'll go to 106s. Now, why is 106 important? Let's pop back up to the daily. Sorry for bouncing around here, but these things are live and unrehearsed. Two reasons. One, 106 is a nice even-handled number. Two, if I put, when I say even-handled number, I mean, we call it psychological numbers. So numbers that us as humans find to be very important because they're easy to understand. Typically, those numbers in the market are also looked at the same way as like support and resistance. Price likes to kind of be gravitated towards them and price likes to bounce away from them. But if we also draw a line in the sand here, you're going to see we have a nice little structure swap as well, right? We've got previous structure inside, previous structure resistance. Resistance was broken, turned to support. Support was broken, returned to resistance again before getting to that level. Lastly, if I add one more tool just to kind of show you the level that we're at, if we put in our volume profile, let's just put in from this swing high to this swing low, you're going to see that we're currently, I bet, let's see, Yep, I knew it. Thought it'd be a little bit higher, but we're currently sitting right below a high level of volume. So a lot of interest in this level. If we were to break this level, I think we should see a little bit of a pop. So again, it's not a massive move we're looking for because we're right under a previous level of structure. But for someone, let's say, trading on the hourly time frame, our current level of structure is currently sitting at 105.45s. Again, if we're thinking that we can go to 40 or 106 evens, right? That's about 50 pips of profit right there, and that's a hell of a move. Next, we're going to head over to Aussie dollar, and Aussie dollar has been a pretty interesting pair of late. We've had back-to-back pattern formations as we've seen this consolidation. If you guys remember this from videos in the past, we had a very nice bearish cipher right here, X to A to B, B to C, C to D, that rolled over pretty nicely there. And then on the daily here, we actually completed a butterfly pattern. Been a little bit sloppy with me drawing it in, but just to give you kind of an idea of what we're looking at, X to A to B, B to C, and a CD completion right here that rolled down pretty nice. So Aussie has been one of our favorites. What we're looking next for on Aussie is one of two things, and I spoke earlier about kind of the interest rate split. That's going to happen Monday night, so pay attention to that. But again, the initial kind of thought process of that, we're going to see another, 0.25% increase, but now the markets are thinking, hey, we might keep things steady. So there will be some type of reaction. I believe it's 10:30 p.m. if I'm not mistaken. Yeah, 10:30 p.m. Monday, which is a very low volume time in the market. I mean, the big markets, the US and London, are both asleep and not really active. So what we may see is not only a big move because of that interest rate decision, but an even bigger move because of the lack of liquidity in the market. So you got to be very careful with this one. But a few levels I'm looking for, and I'll give you one to the upside, one to the downside. If we push up, right? So if we end up getting a breakout to the upside, the next stopping place on the Aussie dollar should be this level of structure right here, this range between about 68.84s and 69.15s. And again, you can aim right in the middle of that with the even handle number, 69 cent even, right? We're currently trading at about 68 cents, so looking for a move from about 68 to 69 if we violate this level of structure. Another option as well, if we go down to the lower time frame here, let's say we get a bump to the downside, or I guess real quick, just to give you kind of a better perspective, similar to euro dollar. Here's our previous level of structure resistance. I'm not saying that this is a buying opportunity to buy it right now to 69s. I'm saying if we can get beyond this level, if we can violate this level, then we would expect to move to 69s. If we get an opposite reaction, let's say we go down to the downside, well, we've got another nice pattern setting up for us, right? X to A, the swing high to swing low, is going to be our impulse leg, the starting leg of our pattern. A to B is going to be down here. You can see we come to a 50% retracement. We don't quite hit a 618 retracement, so we're looking for a bat pattern instead of a Gartley pattern. Our C leg is right up here, this retracement there. You can't see the wick because it's covered by the VS1, but trust me, it's there. And then we'd be looking for a D completion down here, starting at 66. What is that? My eyes are bad this morning. 66.95s and ranging all the way to our X leg, which is down here at 66.76. Now, I can't forget what day, I can't remember what day it was, but I did a video on a live stream, one of our live stream sessions this week, talking about knowing pattern rules. If you're someone that's interested in patterns and maybe you're trying to go out there and do them right away without practicing, make sure you watch that video. Again, it's called, right here for you if you guys want to see it. It's called Know the Rules So You Can Properly Adjust. So we talk about how patterns can change and morph over time. So make sure you watch that. It's going to be a good little watch for you, especially if you're someone that is thinking about prematurely jumping into pattern trading. But two opportunities here on Aussie dollar. I don't know what's going to happen with the news. So what I want to do in my trading is I want to bracket it either way. I want to have an upside target where I say, hey, if we move to the upside, this is how I can get involved, or this is where this is what level I'm waiting to be hit. And then the other way, right? If we go to the downside, this is how I can get involved, or this is what level I'm looking to get hit. I'm not trying to play the news. I'm not trying to guess the news. I'm just trying to participate after the fact. Lastly, we're going to head over to the Euro Aussie. This is going to be short and simple. I already told you about the Aussie situation coming up, so keep in mind on that. But we do have a potential bearish cipher setting up as well, so another advanced pattern formation. Our initial anchor leg this time, right, X to A is going to be our swing high to swing low. This retracement right here is going to be our A to B. Our extension down here is going to be our B to C. And then if we were to come right back up to this VS1 level, that is going to be our CD completion for a bearish cipher. So in this pattern formation, you're looking for a potential sell. And the zone goes from our D completion, as always, to our X leg. So if you're someone that is aggressive, you're putting a limit order right at that decompletion. If you're someone that is conservative, you're waiting for price action to hit that decompletion, then you're looking for your reason for entry. While we're on the subjects of patterns, I just got a question about target taking for patterns or target taking in general. Once again, my memory is getting old. I had a long day yesterday. I can't remember if I put the podcast out already or if I have it scheduled, but I should have a podcast. I think it is the next one, talking about the differences between single and multiple target taking and how to know if one is better, one is worse. And I can tell you this, it's not just taking which one is more profitable. There are other factors you need to keep in mind as well. Yep, episode 737, which should come out tonight, actually, at 5 p.m. my time. What's better, taking multiple or single profit target? So episode 737 of the Trading Coach Podcast, if you want to check that out, if you have more questions about target taking. And again, if you're new to the channel, make sure you subscribe. Lots of uploads coming this week. If you're a frequent viewer, thank you for the support. Hit that like button on your way out. And as always, if you have any questions or comments, leave them in the comment section below and I'll go back and read through. All right. Hope you guys enjoyed your weekend. Good luck if your World Cup team is still in the World Cup. America, we made a good run. Not the best game plan against the Netherlands, but hey, we played a good team and we got what we deserve. All right, until next time, play and trade your plan. Take care.